the community banks just feel that they can't compete, the community and regional banks can't compete with the money center banks on a technology front. So they're not, and one of the reasons we actually came into the market is we feel that they haven't been afforded a level playing field from a technology perspective because the existing providers, haven't really kept pace with the large financial institutions and given them the tools to compete at a technical level with the larger banks and with the fintech companies. So we're trying to do what we can to make it a fair fight for everybody.
Welcome to the Tearsheet Podcast. I'm Zack Miller. Sanchez has been in the core banking technology space for 35 years. He's back now with Finxact, a SaaS core banking system that's gunning for the big providers. Frank joins us on the show to talk about how modern banking requirements have evolved throughout his career and what Finxact is doing to build an ecosystem of interconnected software for its bank and credit union clients. Off a recent fundraising round where the American Bankers Association, Accenture Ventures, and SunTrust Bank participated, Frank describes what model-driven architecture is and how it should help Finxact clients to deploy customizations quickly and effectively. Frank Sanchez is my guest today on the Tearsheet Podcast.
Hi, I'm Frank Sanchez. I'm the chairman and CEO of Finxact and founder. And Finxact is a startup financial services company that has decided to dive into the deep end of the pool and create a next generation of a core banking platform. And I've been in the core banking business personally for over 35 years, as most recently as an executive in a startup bank in Silicon Valley called Zen Banks. And then prior to that, as an executive at the largest banking service provider called Fidelity Information Services. And prior to that, as a public company CEO of a bank technology company called Sanchez Computer Associates.
So you know a little bit about core banking. It's not your first rodeo. So one of the I was most excited to hear about from you is sort of to take us through that 35 year evolution of how core banking has changed and how modern banking requirements have evolved as well.
Sure. Well, when we started, I started with my brother and my dad, and I think I hired pretty much my entire fraternity in college, and we did a kickoff kind of technology company in 1980 to address what was the recent deregulation back then, where banks were starting to encroach on each other's territories as far as customer bases and products and the like. And we felt that we could develop a core system, which is a system that really can be viewed as the factory or plant floor of a bank. That we could develop a core system that would enable institutions, whether they were credit unions or savings banks at the time, or commercial banks and even large banks, to be able to compete with each other with a great deal of flexibility in the terms of the products that they could offer in the customer segments that they could acquire. And we rode that company. We developed technology. We built a core banking system. We went public in 1997, I believe, and the company became very successful overseas as countries were kind of coming into the Western view of the world, and we wound up being in Poland and the Czech Republic and over in Asia. Discovered along the way that we were, as much as we may have thought that we were a technology company, we were really also an infrastructure company, and we were constantly being brought into areas and geographies where there was a significant change in the way that banking was conducted, either through technology or through products or through deregulation. And right along the end of the 1990s, we had a similar phenomenon in the U.S. when the first wave of internet banks came out, and everybody, all the large banks wanted an internet presence, and a lot of pure play internet banks started. And again, we found ourselves in the middle of an infrastructure upgrade, and were very successful at that time implementing the first wave of internet banks. And then the internet went up and it went down in the early 2000s, and being a public company was a rocky episode for us in terms of stock price and shareholders and the like. And we were successful, we were growing, but I felt it would be better for us at the time to merge into a larger company, and we were acquired in 2003 by Fidelity Information Services, and I came down to run their large bank business, what they called enterprise banking, global technology, and a number of other businesses. And my brother Mike came down to run their international business, and we stayed there. Promised we'd be there for 2 years. For me, it wound up being 7 years, and then I retired for the first time in 2011 from FIS.
And so, given that perspective, what was happening around 2011? I guess I think that was a pivotal time in history, as we sort of saw. Well, it was actually even a couple of years before that, but like
Correct.
Really developer-driven companies, right, were starting to come onto the scene. API-driven companies, and it hadn't quite hit the financial services industry yet, right?
Yeah, and I think there's a few things that that were happening right around that time frame. And in hindsight, you can see the evolution. One was that the banking industry itself was coming out of a major recession from just the real estate crises of the 2000, around 2008, and they were sort of just able to actually come back into the market and react to technology initiatives and actually look at their horizon with kind of a positive perspective of growth. And then the other is that the fintech companies, the Silicon Valley startups, were really starting to encroach on banking territory, and leveraging very large customer bases and social networks and that type of thing to move into payments and to move into banking services. And that movement started around that time frame, and I think and obviously it's continuing to expand today. We see more and more presence of non-banking intermediaries in the banking marketplace, and we see banks reacting to that. And the other phenomenon that we've seen really evolve significant, that's probably from around 2010, is just the transition of the interface to banking from the classic channels, ATM, point of sale, branch, maybe a little internet. Now it's a little more internet and a lot of mobile devices. So you're seeing a very big transition in terms of how individuals and businesses expect to interact with their financial services providers.
And you bring up a great point, because banks today are being encroached upon from all different directions, frequently by a non-financial company that's getting into financial services. But from your perspective, and given your network, are banks concerned about that? Are they worried?
They're absolutely worried. I think what we're seeing right now, the benefits of location and physical footprint and even brand to a large extent have been, erased or mitigated. So I think banks are very concerned about that in a sense that the barrier to entry has been lowered, and that anybody with a good interface or
and a debit card, right? That gets you into banking nowadays.
Yeah, they can get in and they can start and they can start to engage. So I think we're in the middle of a huge battle for customers, and banks realize that they don't have there's no kind of or minimal gating or barrier to entry to become the eyeball consumer for customers.
And what entities are banks most concerned about? Are they concerned about big tech firms moving into financial services, or do they see challenger banks as being a threat to displacement?
Oh, that's a very good question, Zach. I think it's depending on the market. Community banks versus larger, regional, super regionals, it might be a different threat perspective. But to specifically to answer your question, they're concerned about both. The challenger banks that are coming out of larger banks that are looking at new customer bases and new segmentation and new product offerings are a threat, and the fintech companies are Apple and Facebook and Google and the like, and certainly the recent payments announcement even from PayPal. They're clearly looking to carve into the payment space, and from there, of course, you probably would want to own the payment account, and you wind up with deposits, and then you start getting into lending, so that type of thing. So the fintechs are clearly involved. They're involved in the lending side. I worked for we sold Zen Banks where I was a founder and executive. We sold it to SoFi, so very familiar with what their offering was in the market. So that you're getting that pressure, and I think all banks feel that. And then on top of that, the community banks just feel that they can't compete. The community and regional banks can't compete with the money center banks on a technology front. So they're not, and one of the reasons we actually came into the market is we feel that they haven't been afforded a level playing field from a technology perspective because the existing providers, haven't really kept pace with the large financial institutions and given them the tools to compete at a technical level with the larger banks and with the fintech companies. So we're trying to do what we can to make it a fair fight for everybody.
So that's a great segue. Let's talk about what you are doing to even the playing field. You raised this. You announced a fundraising round earlier this year, I guess in January, and the ABA was involved in that. Can you take us through sort of that now to going out and building the product?
Yeah, sure. Well, we actually started building the product at the very end. I raised $12 million at the very end of 2016, and that capital was earmarked for to move forward from a PowerPoint presentation to actual running code that could support U.S. banking products. And so we spent the better part of no problem. We spent the better part of 2017 and 18 building the product. We went into a friends and family with our first customer, Live Oak Bank in Wilmington, North Carolina, at towards the end of 2018. And at that point, we felt and do feel that we have a very competitive offering for the U.S. banking market. It supports the U.S. banking products and regulatory requirements, and it provides a lot of technology we think is beneficial. So we raised money in the beginning of this year, and as you indicated, the round was participated by the American Bankers Association and some large banks, also Accenture, and then the original investors. And we raised $30 million really to expand the company to go to market, so that we would be able to have the bandwidth to engage in and consume multiple projects concurrently. Always, software's never done, right? So we had to go from MVP or minimum viable product to enhancements that we feel would further differentiate us in the marketplace in terms of what we're able to bring to market, which we hope is a compelling solution that has substantial economic benefits to the customers, a direct impact to our customers, cost income ratios and financial performance. But probably more important is that it provides them the technical tools to build the type of solutions and interfaces that are demanded, in the mobile, electronic banking world of today.
So one of the things I think that impressed upon me when I went to the site and saw some of the work that you guys were doing was this ecosystem building that you're doing. Can you describe what that is and why that's important in today's banking environment?
Sure. Yeah. In two dimensions. And one dimension, when we raised the original capital, and even now, the amount of effort, capital, and time that it takes to build a complete end-to-end banking solution is extraordinary. And anytime you have extraordinary capital requirements with long delays, you have substantial risk of execution. And will you ever get to market? Will this thing ever be built? Is it too big? It will fall on its own weight. And one of the decisions that I made very early in the process of forming the company is that we were going to focus on one thing, which is core banking, system of record. And we were going to do that one thing extraordinarily well, and that we were going to rely on and partner with fintech companies that are very good at other things. And together, we would enter the marketplace with an end-to-end solution that was best in breed, up and down the stack, from the system of record through the channel solutions, through the business intelligence and decision support solutions and fraud solutions and the like, that we would have through very modern, referred to as APIs or interface designs. We'd be able to connect these things easily. We'd be able to plug and play, and we'd be able to give the customer a compelling combined solution. And equally or more importantly, we would allow our customers or the marketplace to choose from the ecosystem which components were relevant to them individually, and to be able to select in and out across multiple vendors, so that that there would be competition in the market for the solution, and there would be options, and people would be able to find their price points and function points that made sense for the businesses that they were driving. And that's in stark contrast to the existing suppliers, which really provide an end-to-end stack, and don't let you really go and shop around and pick your pieces. So it's a very deliberate counter strategy to the strategy that the existing providers offer.
So it's not just an ecosystem; it's a marketplace, and the goal longer term
Exactly
is just to have a liquid marketplace, so that a bank can pick and choose exactly what they wanted. And you guys are the sort of the enablers, and not necessarily taking ownership over each one of those components.
That's a great way to express it, and that's exactly what it is. And we also think that competition and choice improves the breed generally, and we anticipate that there will be competition and choice at the core level, and we look forward to engaging in those battles. But we want to tops the pyramids. We want the best and the brightest to go out there and see individual opportunities for themselves as fintech companies, just as we see an individual opportunity for us, and to be compelled to be very, very good at one thing, and then to bind up with other organizations that are very, very good at one thing, versus kind of being a mile wide and an inch deep, which is what happens with a lot of companies.
So is the ecosystem in that marketplace, is that you mentioned earlier in our conversation that a lot of the smaller mid-sized banks and credit unions are held captive, in the sense, you didn't use that language, that's my language, by their core providers. How does Finxact avoid that same problem as you guys grow?
Well, for one thing, it's a good question. For one thing, we are going to be we are much friendlier already on contracts and how we engage with customers. So that takes you certain way down the path of the question that you're asking. But
So
we're not going to lock
these
our
contracts,
customers
you're saying?
Yeah, they're processing contracts with us, or they're consumption based. We'll let a bank exit or financial institution exit at any time they want to exit. If we're not the right provider, if we're not providing the benefits that we've described, and in any event, if the organization is not satisfied with us, and we will facilitate them moving off of our platform. So that's something that we can control. We're also, because we're consumption based, the institutions only have to use us for the capacity that they're requiring from us, and they don't have to buy they don't have to buy over capacity. They don't have to commit to us to buy everything from us, and then all the penalties and onerous exclusivity conditions that they deal with today. So that's that's important to us. And the fact that we're committed to industry standards and open APIs actually makes the act of moving on or off our platform feasible. So as Zach, core system's kind of a sticky piece of technology, and it's one thing to say you can get off, but really is it feasible? And we're making it feasible to get on the system, which is to our benefit, and to get off the system, which is to our benefit as well, because we don't ever want anybody to feel that they're forced to using us because of a technology challenge of having to get off. It's a different breed of company. I think that's why the ABA was as interested as they were, because we're here to benefit. We're here to benefit the industry. Yes, we're going to make some money, but we're not owned by Wall Street. We're a startup. Our cost base is low. There's plenty of room for us to grow, and we think we can be very compelling and very competitive, and still be a very successful company.
And I guess we have a lot of both banks on the podcast, as well as technology providers to the banks, and one of the things we always hear about on both sides of the market, is the sort of the long sales cycle. How are you gearing up, and how are you thinking about distribution to get in front of your core constituency?
Sure. The sales cycle, just a quick comment on that. So we went to market around February timeframe, and the pipeline in the sales cycle has been has been unbelievable. I have to be honest with you. It took me 2 years to decide to start Finxact, and one of the main areas of resistance, because people are calling and saying, "Hey, build the next generation core, take another lap around the track," all these kind of euphemisms and metaphors, and I thought long and hard about it, because I kind of like, will they? Everybody's, the banks are complaining, they want something different, but at the end of the day, are they really going to switch off of the solutions that they're currently operating on? And it took a while to get convinced of that. I finally was convinced of it, and I can tell you the level of interest and enthusiasm has been extraordinary. The pipeline is way bigger than we anticipated it would be. We get between 6 and 10 emails in the company every week, 2 weeks, that from bank CEOs and CTOs looking for information, wanting to be put into a queue, and it's extraordinary. Now I have to turn smoke into fire here, so it's we are closing, we're closing deals rapidly, but there's a lot of interest, and we just have to figure out how to manage. To your point, we have to figure out how to scale and manage that interest. One thing that we're doing that we've committed to very early is, just as we're focusing on at the technology level on the core system and the system of record, we're focusing on delivery through best-in-class professional services companies that have done it before, that are process-oriented, that have deep experience in discipline and control and process management. So we have a relationship with Accenture, who made a significant investment in us in this round. We have a relationship with Deloitte. We're talking with a number of the other professional services firms, not just the tier one national brand names, but the names that are involved in, directly in the industry, maybe in the community, regional, or credit union level. Can't disclose those names yet, because I don't want to disclose names where I don't have, contracted agreements. But we're, the professional services companies are very interested in working with us, and we're very interested in working with them. I really don't want to build a large professional services staff and capability here and duplicate capabilities and scale that's already existing in the marketplace. I'd rather work with providers that have the reputation and have the process down pat.
No, that makes a lot of sense. What about the ABA in that scheme? So obviously they're a strategic investor. Is there a way that you can help to leverage their footprint?
They've agreed, and they've been very helpful to us to this point in terms of introducing us to their substantial customer base and mailing list, and they've been vocal about what they believe we can do. They're sort of waiting on us a little bit to say we're ready to go in terms of kind of massive scalability. Mm-hmm. However, they've also agreed to assist us in that way any way they can. So education programs, seminars, podcasts, things along those lines, where we can start to educate their market as to what's available, what would need to be in place or be true in order to start, a migration of a bank, what banks should be looking for, whether we're a fit or not, those types of criteria, and the ABA has been very helpful with us in those types of outreaches, in which we could never scale up to on our own.
Sure. And we have time for one last question. So you talked very much about your focus. We're focused on core.
Mm-hmm.
So can you give us a feel, I guess, for what your big goals are for the rest of the year? Obviously, you're racing, to continue to grow, whatever. But from a product perspective, will we see new products from you, or is it a matter of just now taking what you guys have built, perfecting it, and getting a lot of people on the platform?
So the goals for to the second half of your question, you will see new
like
products.
6 questions thrown in there. Yes.
No, it's okay. We focused, and we originally rolled out our MVP product was U.S. deposits, and so savings and term deposits, and DDA came later because we had to implement cards and ATM POS networks, and so the deposits part is rolled out. We're just rolling out lending now, and we'll see increased functionality and capabilities on the types of loans and loan portfolios that we're able to service as we go through the end of this year. So we started with installment and line of credit, and that makes sense because line of credit's kind of necessary on the DDA side. And now, we'll start to roll through some small medium enterprise loans, CRE, CRAs, and get into more of the commercial lending space. So you'll see that kind of product rollout, functional rollout as we continue to go forward. And then from an implementation customer perspective, we have 5 banks or fintechs that we're currently installing. And my commitment to my board of directors in March was that we would have 2 to 4 banks up and running by the end of the year, and it looks like we'll easily hit that target. So you'll start to see more names pop up as far as banks and fintechs that are engaged in implementation of the product that I can't fully disclose right now, but I can promise you that these projects are underway. So we're ahead of plan there, and I think we'll just see more visibility of the of this thing rolling out into the marketplace and actually being deployed.
Got it. Well, we're definitely interested to hear the continued growth story. Frank, thanks for joining us on the Tearsheet Podcast today.
I really appreciate the opportunity. Thanks a lot. Nice talking to you, Zack.